Ladies and gentlemen, the stock market right now is going on an astronomical rise, and it looks like a similar history repeating again, which is the year 2000 dot-com bust. Before that was an astronomical bubble that eventually led to a terrible burst, and that caused many heartaches and pains. Is this a similar kind of environment? Let me give you the analysis. Don't miss this one. Watch till the end because it might just determine whether you catch the opportunity or you get busted by it. Let's watch on. Now, many people have written to me asking me, Mr. Lu, is this an AI bubble that is going to burst? How can the stock market go up non-stop since 2023 and 24 until now? Is the AI bubble going to burst? Is it going to burst now? Could I catch it now so that before it bursts, I sell it? There are many questions, and many of you have written to me, and today I'll attempt to make a comparison between the current AI rally versus the dot-com mania of 2000. And I'll give you a very interesting insight so that you will not have a confusion. Actually, many of you have asked me the question, when is the AI bubble going to burst? Actually, that's the wrong question. The first question we should ask is, how did the AI bubble resembles the dot-com bubble of 2000? And is there really a bubble right now? And maybe the answer is easily found if we just look back in history. So we're not stress testing whether this current bull run is a bubble. We are just taking a look whether how does it compare to the past, because the history will give us a glimpse of what could happen possibly in the future, and the future is could be just here. Now, this is where I will bring everybody back 20 years ago. Now, 20 years ago, I just started working and I witnessed the entire dot-com rally eventually to a bust that devastated the stock market for many years. And it took the Nasdaq over a decade to recover. Now, so everybody right now looking at the current situation have a close resemblance of what they have seen 20 years ago, because most of us who in our 40s and 50s and 60s and even our 70s have seen that scenario and think that it is the same. So let me just give you the history and you can see whether history looks the same as what we're having now. In the year 1995, internet came out. I remember that I was still in university and we were all playing with this thing called Netscape. And soon applications start developing. By 1996 to 1997, the rally came in a big wave. And many internet companies came out doing all sorts of stuff from retail to B to C, B to B, B to B to C, and their pet shop, going online, sports retail going online, clothing's going online, selling anything that go online in a massive way. Some have no business case, some have business case, and it just looked like the world is going to change and nothing's going to look the same again. And that's where I remembered I joined Singtel. Those were my corporate days, and Singtel was the enabler of internet. So our dial-up business, then later our broadband business took off in a very big way, and later mobile internet as well. Well, in 1998, 1999 is where the euphoria turned into a mania. Everybody went mad about the internet. Anything that's .com will surely make money. And so in that time, any company that's the word .com has their valuations increased very, very high. And I remember that you have got sports company that just rebrand themselves as a .com. And they went IPO and they make a hell of money. So this thing went on and on and on. And many companies have no business case. Don't talk about no profit. Some of them don't even have revenue. And suddenly in year 2000 March, the dot-com bubble burst. Okay, it was a phenomenal disaster as we have seen from the astronomical rise. Now, how far did the dot-com rally actually ran? The Nasdaq went up by 11 times. 11 times in 5 years, from 1995 all the way to year 2000 before it busted. The Nasdaq went up by 11 times. So it's 1000 over percentage. So in the year 1994, and it was 404, and then it went as high as 4,700 points. So that's about 11 to 12 times. And the S&P 500 went up by three times. So three over times. So it went up by 232% from end 1994 all the way to March 2000, which is at 1527, a historical 5-year run, three times. Now, so this 5 years, we saw the whole stock market went up phenomenally. Okay. Many people went very rich, or at least paper rich. And it didn't just rise, it almost went vertical. That was how crazy it was. This is where it is important now to put what has happened in history and compare it to what it is now. So we just look at numbers. The S&P 500 today has only gone up by 80% since 5 years ago, 2021. So it is high, but it's not phenomenally high. So compare 5 years, wow, this is 80%, this is 232%. Still, there is still a huge gap in terms of the rally. So not quite the same. The Nasdaq over 5 years has went up 121%, which is more than double, but compared to 11 times, oh man, it's very, very small rise. Now, to be fair, the index now is 30,000, which is a lot, which is the Nasdaq, and the S&P 500 is 10,005, which is a lot. But versus the dot-com, that 5-year journey that we have right now is only one-third of the speed and the height that we have gone to, that we have seen in the dot-com bust. So in terms of the AI bubble, it's a slow bubble compared to what we have seen in the dot-com 5-year bull run. So it is really not the same. Now, just to give you a feel of it, in 1999 alone, the Nasdaq went up by 100%. Okay, I haven't seen anything close in the current market. The Nasdaq went up by 100%. That means more than double. And the S&P 500 then went up by 20%, which is 19.5%. So today's market, well, it is phenomenally high, to be frank. Nowhere close to what we have seen before. Now, just to give you a feel what happened in the year 2000 for people who have forgotten or never experienced it, after the dot-com bust happened, the Nasdaq draw down by 83%. You put $1 million in, $800,000 got wiped out. And that was very, very steep. So from March 2000, it went down to October 2002 by 83%, a 2-over-year crash. And that was seriously painful for most people. And for other companies, most internet companies collapse. About 88% of internet companies collapse in year 2000 alone. It took the Nasdaq 15 years to recover. 15 years. That is very difficult to wait. 15 years. It's almost like the STI index. From the peak to where it recovered, it took 17 years. The Nasdaq took 15 years to recover. So this is a terrible kind of outcome that nobody wants to repeat again. Now, is this current situation the same? No lah, I don't think so, because this time around, we do have real profits. So those days, the Nasdaq and the S&P 500 went up phenomenally. There's no profits, no cash flow. Some of them don't even have revenue and they can IPO. I don't even know how can that happen. Today, the P ratio is high. The Nasdaq is about 32 times. The P ratio of S&P 500 about 22 to 23 times. P ratio is a measure of the stock price divided by the earnings. So you measure how many times. Generally, S&P 500, 15 times is considered average, I would say. Going to 22 times is high, no doubt. Nasdaq, I don't even know what's the average, but 32 times is considered high. But this time around, it is substantiated and supported by real cash flow, a lot of profits. So it is not quite the same. In a nutshell, those days, the dot-com industry was profitless. It's full of losses. Some of them don't even have revenue. But today, the AI companies that we're looking at, that's listed on the stock market, the Magnificent Seven right now, most of them are profitable. Now, there are companies that are potentially going to be listed, maybe Anthropic, maybe OpenAI, which is your ChatGPT, and maybe even the SpaceX, which one of the component is growth. Some of them will not have profits. They are still running losses, but the rest of these companies are already listed, have phenomenal profits. So the growth is phenomenal, the profits are phenomenal. So these are not the same kind of environment that we have seen before. In the year 1999 to 2000, okay, we have got people going crazy about stock market. People quit jobs to sit in front of the stock market to do day trading. And we have got dot-com companies going all out to spend on advertising to drive revenue, to drive take-up. And for example, in Super Bowl, one of their sporting event in US, 17 dot-com companies spent $44 million on advertisement in one single broadcast. And the speculation behavior then was phenomenal. Do we have the same kind of mania? Probably not. Yes, many people are experiencing a bull run. And this time around, to be frank, the fact that everybody is asking me whether this current AI bubble could burst means a lot of us still have reservation. That's not necessarily a bad thing. So this time around, retail participation in the stock market is not the driving force. Is now pension funds, ETF, institution, retirement accounts, and all this. They are driving the whole stock market up. And therefore, the stock market really have a very good momentum and driving force up. In a nutshell, if you look at the table side by side, in the year 2000 compared to today, I'll give you a few indicators. In a 5-year bull run, the dot-com bust rise was very extreme. Today, I'll call it at most moderate. And the Nasdaq gain was 11 times. The S&P 500 then was about 3 times. Now the Nasdaq so far is only 2 times, and the S&P 500 so far has probably only rise close to 1 time, even less than that. P ratio is a world of difference. This is like insanely, incredibly high. It takes many years to recover back no, centuries to recover back your returns. Now 32 times means 32 years. It's high, but it's not carry away in the same degree. The IPO mania right now, many companies rushing to IPO and people going crazy subscribing to them. That was then in year 2000, year 1999, 1998. Now, I don't see that happening in a big way. Those days, many companies were profitless. Now, many companies are profitable. And speculation was very high. Now, I would consider at most moderate. There is a problem that I'll talk about it more. We do have very high concentration risk in the current market. Those days were high, but not as high as now. So that is a red flag. And we do have very strong earnings. Now, this is where I want to digress into this point on concentration risk. This one is a very serious risk right now that we have. The majority of the driving force of the two indexes, which is the Nasdaq and the S&P 500, is really driven by the Mag 7 and a few other related tech companies that are on the fringes. Now, concentration risk is always not good in the world of stock market. So we should call out this risk, and there could be something that can happen that could have a pressure on this. For example, suddenly the oil price were to shoot up phenomenally. electricity price goes up a lot, and then the data centers become very expensive because they consume a lot of electricity. Things like that could happen. I'm not saying the chances is high. I'm just saying it could happen, and we will never know. We are always hit by situation that we cannot foresee, but things that we can foresee, the impact I think is lesser. So I think this is a risk we need to call out. Now, for the investors like all of us, what do we do? Well, let me say categorically clear, this is not a replay of the dot-com bust. It is not. And in short, I don't think we will have a same kind of bubble burst kind of environment, 83% crash kind of thing. I don't think so. But it is very possible, and I'll talk more about it, to have short-term correction 10, 20% possible. Okay. And if they come, I'll take advantage of it. And I would certainly stress that rebalancing is important as we ride the wave. Most of us, when we reach a certain age, we cannot have so much of our wealth in the stock market. We are supposed to adjust according to our age gap. And we do teach this quite a lot in my courses and things like that. So what do we do? Well, for my case, I'll stay invested and let it compound. And don't let all these bubble headlines scare the hell out of you. We keep our dry powder ready. I don't think I need to put more into it until the correction comes. This is where I would like to highlight Tom Lee. His prediction is insanely accurate. He says that the stock market will go up to a high of 7,700 points. A lot of people didn't quite believe. We are very near 7,700 points right now. And he did say that once it crosses 7,700 points, he sees a correction coming because the stock market always tests the new Federal Reserve chairman. So a correction will come. We don't know when, but it will come, according to him. And then after that, there will be a sharp rebound. And by definition, a V-shaped market crash will come, and that's not easy to catch. So this could be your only chance to catch a correction before the AI bull run continue to go up and up. So are you ready? Now, crash buying, which you have seen, is one of the anchor, not the only anchor, but one anchor of my 10M65 achievement. And I really want to equip everybody with the crash buying skills. And if you are keen, you got to take advantage of the crash buying skills now. So my June courses are all finished, fill up, but I have July classes. But in case the crash do come, I'll bring forward some of these crash courses early. So do join us in our crash buying course. They're all funded by SkillsFuture. You don't need to come out with cash. And I'll impart you the skills of 10N65. I'll give you powerful online simulators as well to help you catch all these insane wealth improvement skills. So do WhatsApp this number, okay, as quick as possible because even our July classes are going to be filled up soon, okay? Let me say in wrapping up, the dot-com disaster that we've seen 20 over years ago collapsed because it ran on hot air. Today, the bull run right now is running on earnings. Now, I'm a big user of AI. I'm now in China looking at all the AI innovation. We're in see nothing yet. I'm jumping deep into the AI industry right now to catch whatever I can catch. Life will be transformed, industries will be transformed, money will be made at insane level if you can catch it early. So I don't think it is the same as what we have seen in the dot-com bubble burst. Let me categorically say that this is not an equivalent of the dot-com bubble and definitely not the outcome that I would think will be the same as the dot-com bust of 2000. So do get yourself ready and equipped and ride the wave. And congratulations to all that have made a lot of money. For the rest of people, get yourself ready because an opportunity might come. You want to catch it as quick as you can. Okay? So thank you, and I'll see you in a video next. Okay? Now, this is where I also want to say live streams are very difficult to conduct right now in China because they have powerful firewalls that I cannot beat now. So I will try to make it up with late night videos. Okay. Thank you guys, and I'll see you later tonight. Bye bye.